What are you saving up for, Holly? A real coat? The CEO's son, Brandon, said it loud enough for the entire innovation gala to hear. 200 employees in the ballroom. Everyone turned to look at my 12-year-old green thrift store coat. I smiled and said 5 words that would haunt him. I'm saving to buy this company. Everyone laughed. They thought I was joking. 3 weeks later, I walked into an emergency board meeting with evidence of $4 million in fraudulent debt that Brandon had hidden in shell companies. The files? They were stored on a hard drive sewn into the lining of that same green coat he'd mocked. This is the story of how being underestimated became my superpower. My name is Holly Chen, and I've been a senior compliance auditor at Meridian Systems for 13 years. I drive a 2012 Honda Civic with 180,000 miles. I pack my lunch, I buy my clothes at thrift stores. My colleagues think I'm either broke or weird. The truth? I'm neither. I'm strategic. I make $110,000 a year and live on $45,000. The rest goes into investments. My portfolio is worth about $890,000. I could retire early if I wanted to. But I don't dress like that. I don't drive a luxury car. I don't talk about money. Because when people think you're poor and powerless, they ignore you. And when they ignore you, they get sloppy. The annual Innovation Gala was held at a downtown hotel, black tie optional. I wore a simple black dress from Goodwill and my signature green coat, a perfectly good wool coat I'd found for $12. Brandon, the CEO's son and newly appointed COO, wore a custom Armani suit and a Rolex that cost more than my car. He spotted me at the buffet table and couldn't resist. "Holly, love the vintage look. Very thrifty." He said it like an insult. "Thank you," I said pleasantly. "Seriously, though, you've been here 13 years. Don't we pay you enough to shop somewhere besides Goodwill?" People were watching now. Some looked uncomfortable. Others smirked. "I shop there by choice, Brandon. I'm saving money." "For what? Retirement in 30 years?" He laughed. Others joined in. I looked him directly in the eye. "I'm saving to take over this company." The room erupted in laughter. Even some of my friends thought it was a great joke. Brandon patted my shoulder condescendingly. "That's the spirit, Holly. Dream big." I smiled and walked away, my cheap coat over my arm. What Brandon didn't know, I'd spent the last 12 months documenting every financial irregularity I'd found in my audits, and there were a lot of them. My official title is Senior Compliance Auditor. My unofficial role is Corporate Janitor. I clean up the messes that arrogant leadership creates. I review contracts, verify transactions, ensure regulatory compliance, and identify financial risks. I'm the person who catches accounting errors before they become scandals, who finds the misclassified expenses before the IRS does, who notices when numbers don't add up. For 12 years, I'd been cleaning up after executives who viewed audit as an annoying formality rather than essential oversight. But over the past 18 months, something had changed. The irregularities weren't just sloppy bookkeeping anymore. They were deliberate. Unauthorized contracts with shell companies, credit lines opened without board approval, invoices for consulting services with no deliverables, money flowing out to subsidiaries that didn't seem to do anything, and it all traced back to Brandon and a small group of executives he'd promoted after becoming COO. I'd been documenting everything in a folder I called Debt Rotation, stored on an external hard drive I kept with me at all times. In my cubicle, tucked in the basement away from the executive suites, I'd built what I called my bunker, filing cabinets full of copies of every suspicious document I'd found. The executives thought I was just a detail-oriented bureaucrat doing boring compliance work. They had no idea I was building a case. Let me ask you something. Have you ever been the invisible person in the room who knows more than the person speaking? The assistant who actually runs the office while the manager takes credit? The analyst who finds the errors the executives miss? the support person who keeps everything running while leadership gets the glory. Drop your story in the comments, because I guarantee you're not alone. Being invisible isn't weakness, it's reconnaissance. When people don't see you as a threat, they don't hide things from you. They leave documents on printers. They have loud conversations in hallways. They approve transactions without reading them because Holly will catch any problems. I caught them all. I just didn't tell anyone yet.
2 weeks after the gala, I was running quarterly compliance checks when I noticed something alarming. 3 high-interest credit lines had been opened in the company's name over the past 14 months. Total credit limit, $5.2 million. Current balance, $4.1 million. These weren't on any official board reports. They'd been approved by Brandon using emergency CFO authority, a power that was supposed to be reserved for critical operational needs. I pulled the transaction histories. The money wasn't going to operations. It was flowing to 3 consulting firms: Apex Strategic Solutions, Meridian Advisory Group, and Summit Business Consulting. I ran background checks on all 3. They were all registered to the same address, a P.O. box in Delaware. They had no websites, no public presence, no actual consultants. Shell companies. I traced the ownership. Apex was registered to Brandon's college roommate. Meridian Advisory was registered to Brandon's girlfriend, and Summit was registered to an offshore trust that took me 3 days to untangle. Ultimate beneficiary? Brandon. He was funneling company debt into personal shell companies, billing the company for fake consulting services and pocketing the money. $4.1 million stolen through fraudulent invoices. My hands were shaking as I compiled the evidence: transaction logs, corporate registrations, invoices with no work product, emails approving payments. This wasn't sloppy accounting. This was systematic fraud. I needed an ally, someone on the board who wasn't loyal to Brandon or his father, the CEO. Linda Cho was the obvious choice. She was a veteran board member, former CFO of a Fortune 500 company, and notoriously skeptical of nepotism. She'd voted against Brandon's promotion to COO. I requested a private meeting. She agreed, probably curious why a mid-level auditor wanted her time. We met at a coffee shop 3 blocks from the office. Ms. Cho, I've found financial irregularities that I believe constitute fraud. I slid a 3-page summary across the table: shell companies, unauthorized credit lines, fraudulent invoices totaling $4.1 million. She read in silence, her expression darkening. "This is Brandon?" she asked. "Brandon and 3 of his executive appointees. Do you have documentation?" 12 years of it. Transaction logs, corporate filings, email chains, approval workflows, everything. Why come to me instead of going through official channels? Because Brandon controls official channels. He's the COO. Internal legal reports to him. If I file this internally, it disappears and I get fired. Linda studied me carefully. "You're the auditor who's been here forever. The one everyone underestimates." "That's me." She smiled slightly. "Underestimation is a kind of armor, isn't it? They never see you coming." "Exactly. If we move forward with this, the evidence needs to be airtight. Brandon's father is still CEO. This will tear the company apart." "The evidence is airtight, Ms. Cho. I've been documenting for over a year." She nodded. "Give me 48 hours to verify independently. If this checks out, I'll call an emergency board meeting." Before we continue, here are 3 signs your company might be hiding debt. Sign 1, inconsistent financial reporting. If the numbers in board presentations don't match the numbers in regulatory filings, someone's hiding something. Sign 2, unauthorized contracts. Shell companies, sudden consulting agreements, vendors with no digital footprint, these are red flags. Sign 3, sudden leadership distancing. When executives who used to be involved suddenly claim they didn't know about major financial decisions, they're creating plausible deniability.
If you see these patterns, document everything. You might be the only person who notices.
Linda moved faster than I expected. Within 36 hours, she'd verified enough to be convinced. But Brandon found out I'd met with her. The next morning, 2 people from internal legal showed up at my cubicle. "Holly, we need your laptop for a routine forensic security scan, company policy." This wasn't routine. This was evidence suppression. "Of course," I said, handing over my company laptop without hesitation. They looked surprised. They'd expected resistance. "Also, your access to financial systems is temporarily suspended pending the security review." Understood. They left with my laptop, probably thinking they'd contained the threat. What they didn't know, nothing important was on that laptop. Every piece of evidence, transaction logs, invoices, corporate registrations, email documentation, was stored on an external hard drive. And that hard drive was sewn into the lining of my green thrift store coat, the coat hanging on the back of my cubicle chair. The coat Brandon had mocked. I'd learned a long time ago, always have a backup, always protect your evidence, never keep everything in one place. That afternoon, I got a call from Linda. "Emergency board meeting, tomorrow, 9 a.m., be ready." I arrived at the boardroom at 8:45 a.m. wearing my green thrift store coat. Brandon was already there, with his father, the CEO, and 2 attorneys from internal legal. The board members filed in: Linda, 3 other independent directors, and 2 investor representatives. Brandon's father opened the meeting. "We're here because allegations have been made against my son regarding financial impropriety. I want to address this matter directly and clear his name." Linda cut in. "Actually, Robert, you're here because credible evidence of fraud has been presented to the board. This is not a clearing his name meeting." Brandon stood up. "This is a witch hunt orchestrated by a disgruntled employee who was suspended for suspicious activity. Holly Chen has been accessing financial systems inappropriately. I'm the senior compliance auditor. Accessing financial systems is literally my job. You met with a board member secretly to spread false allegations. I met with a board member to report fraud, which is my legal and ethical obligation." Linda spoke again. "Holly, please present your findings." I opened my folder, the one I'd been carrying in my coat, and distributed copies to each board member. 3 shell companies, Apex Strategic Solutions, Meridian Advisory Group, and Summit Business Consulting, all registered to associates of Brandon, all billing Meridian systems for consulting services that were never delivered. I showed the transaction logs. $4.1 million transferred to these entities over 14 months using unauthorized credit lines. The board members flipped through the evidence. Invoices with no work product, corporate registrations showing Brandon's connections, email approvals bypassing normal procurement processes. One of the investor reps spoke up. "These credit lines aren't in our financial reports." Correct. They were opened using emergency CFO authority and deliberately omitted from board reporting. Brandon's attorney jumped in. "This is speculation. You have no proof these companies didn't perform legitimate services." I pulled out another document. "Here's proof. I contacted all 3 companies last week. The addresses are P.O. boxes. The phone numbers are disconnected. The consultants listed on invoices don't exist. I ran background checks." Silence. Brandon has stolen $4.1 million from this company through systematic fraud. Quick mini lesson. Restructuring is often code for hiding incompetence. Real restructuring, transparent changes, documented processes, board approval. Fake restructuring, sudden authority changes, bypassed oversight, vague justifications. When someone claims they're restructuring but won't explain what or why, they're usually hiding something. The board voted unanimously to suspend Brandon and launch a formal investigation. Within a week, the forensic audit confirmed everything I'd found and uncovered another $600,000 in additional fraud I'd missed. Brandon was terminated and faced criminal charges. The CEO, Brandon's father, resigned in disgrace for failing to provide oversight.
The board offered me the interim VP of Finance while they searched for permanent leadership. At my first executive meeting, I hung my green thrift store coat on the back of what used to be the CEO's chair. Someone asked why. "It's a reminder," I said, "that the person everyone underestimates might be the one who saves the company." The coat stayed there for 6 months until they made my role permanent. I still drive my 2012 Civic, still pack my lunch, still shop at thrift stores. Not because I have to, because I choose to. Because underestimation is armor, and I never want to forget that. Download the internal audit risk scorecard in the description. It's a template for identifying high-risk transactions and fraud indicators in your organization. If this story resonated with you, hit that like button and subscribe for more stories about corporate accountability and standing up to fraud. And remember, the person in the thrift store coat might just own the company.